Hi, so for today's video, I want to take a deeper dive into RIVN. Right, as with any stocks, I have a short checklist that I like to go through before investing in it or trading it. All right, so here it is, very quick. Number one, it has to meet the fundamental checklist, and number two, it has to meet the technical checklist. They're very short, only 3 items each, right? All right, so for Rivian, let's take a look at the fundamental. On the revenue increasing, it's very easy with this indicator, ESV dashboard. The year over year is all green. That means the revenue has been increasing year over year, even quarter over quarter, except for this quarter right there, which is fine. Number two is the EPS increasing, or all the EPS increasing. It looks to me like starting November 2022, it has been increasing year over year. They're losing money though, which is a negative, but they are losing less and less money. The guidance, based on the latest quarters guidance, they are looking. Basically, it's improving. Even though they're losing money still, they're losing like I don't know, $30,000 for every car that they sell, but it used to be a lot worse. And they have been working on improving their manufacturing process to really meet their backlog. So overall, fundamentally, this stock is pretty okay, pretty good. Number two, technical checklist. How about how's the relative strength? For that, I always like to take a look at the weekly first. So let's take a look at the weekly. So it has been underperforming as shown right here in the red. It just means that the stock has been underperforming the S&P 500 for a long while. All right. Every time you see the slope going down means it's underperforming. And this line right here is the 21-day exponential move. I think I set it to 50-day moving average actually. I recently changed it. So I can be a bit longer term. Now, it's showing lack of relative strength here all the way up until here with this bar. As you can see, it's been going down, consolidate, going down, consolidate, going down, consolidate. So it's been 3 waves so far. But this period consolidation is pretty lengthy and the volume is somewhat okay. What really gave me some conviction was these bars right here, which is number 2, accumulation. So if I expand this, these 2 bars are humongous compared to all of the other bars before. These are green, meaning it's under accumulation. All right. So starting like over here, it will start getting my interest. And you can also see the ATR, the average true range, have really decreased over here, which is another great thing. It means the institutions have been accumulating these shares. Now, and the final step is the low risk entry. So now that I found out about it, I gotta get into it, and I really like it. So I want to getting at a spot that is low risk. All right, what does that mean? So let's zoom into the daily chart. Now I'll go ahead and hide the technical table. On the daily, all right, for it looks like I missed this stock over here. I was following it over here a little bit. It popped and came back in, and I just kind of lost focus of this stock. What would have been a great buy is over here. If you can catch it, it's really difficult to catch it. So it was over here. The least risk entry would be, let's say, on a 65-minute chart. Coming out of this little consolidation period will be really good. Of course, in retrospect, it's always seemed easy, but I was busy with other things, did not catch it. So ever since then, I was looking for a time to buy it. I also missed this portion. And I've been watching this stock ever since, let's say, over here, because it made it to Twitter. A lot of people are talking about it, but this is really high risk. If I bought it here, I don't know where I would sell it. back here when it broke out of the base. It's really hard. All right, so I've been watching this stock day after day for, I don't know, good month or two now. And after it reported earnings, even though it beat expectations and raised positive feedback, it still dropped. So that next day it came up a little bit, but ultimately it really dropped and just kept dropping with the market. And over here it was actually underperforming compared if you look at the relative strength line. So it's not a good time to buy because it was losing. It could keep going down. But the good thing though, um, is the volume is super dry. So what does that mean? That just means people who bought the stocks over here see a lot of green accumulation, a lot of people buying the stock as it's going up. People as in the big institutions, they are not really selling, even though the price has dropped from 27 something all the way down to below 20. These people are not selling. There's no high red bar except for that earnings day, the day of the earning, which is right there. Even that's not a big bar compared to the other ones. It means they're still holding on to their shares. These could be retail activity, so people like you and me. So um, when I believe that when it goes through this resistance right here, that's when I got really interested yet again. Um, Again, I missed it on this day. I was working. I did get an alert of the stock popping above $21. So, but it was already too late. So I took that day to take a look at the chart a little bit more after hour, basically that night. Looking at it again, it looks like decided that this could be a good entry. And I bought it towards the end of this day. Now, if I look at the 65-minute chart, why did I buy it? Um, it just looked like it's ready to go back up again. I have another indicator, the Super Trend AI. It really kind of help pinpoint that the ATR has really changed direction. That's why you see it turning green. So the ultimate best buy price would be like this one, the high of this day, which is 22.33. But I did not getting until 22.77. Now I've just been uh, writing on this stock. So this one is really not quite that low risk, but I have bigger conviction on this stock because of the volume, because the insane volume that I had over here towards the middle last quarter. That's a lot of institutions accumulating the stock. Now, even though I want to give it more room, there is still a max pain point. So if it ever drops below $19, if it ever closes below $19, I will just take my loss. Now let's see, from here to 19 is a pretty big drop. So that's not normal for me, but with this stock, yeah, that's kind of how I want to play it. Another good thing about this stock is the relative strength. It's turning, meaning there's a change in sentiment, changing trend in this one. So I have a couple indicators to reconfirm this purchase. All right, even if this closes below 20. I will also, another thing I want to watch before it goes all the way to 19 is probably, let's see if it respects this moving average. This is a 65-day moving average. Usually institutions would support this stock if it gets below here, like over here, it's trying to bind them back up. But ultimately, I think the market was really bad, so it kind of went below that line, so it didn't really hold support, and the RS line was bad until this bar right there. So yeah, let's see how this thing would do. I did say we'll sell it if it closes below 19. Hopefully not, but let's just see how it plays out. The 19 is not setting stone, but I want to see how it plays on the next few days, week. If I have a good cushion of it on it, I may set a stop on it to break even. All right, that is it. Thank you.